What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. So it's Monday, back on the grind, and what a way to wake up today to a sea of red across the board. You guys know I hate when we have these red days. By the way, the person that won the large Crypto Zombie t-shirt, it's been 2 weeks. You have not reached out to me. So guys, I'm actually just going to give it back away. So sorry, you snooze, you lose. I have one more Crypto Zombie t-shirt for you guys. It's a size large. If you want it, just drop a comment below and, mention the shirt, but also say something about the video too, or else it just becomes, spam about shirts. So make sure you actually have a comment of value related to the video. Now, talking about the market, let's give it a quick refresh live. Well, all right, so we fell a little bit more since this morning. Okay, we have a $3,464 Bitcoin. We have an XRP at almost 30 cents and $105 Ethereum. Coming down here, you'll notice some big differences in the charts. Again, Litecoin has overtaken TRON. Bitcoin Cash clearly fallen down. Tether is at the 5th spot now. Might as well be at the 1st, right? And if we have a look at the biggest gainers of the day, we have PundiX. Yeah, it's basically all stable tokens. So yeah, there really are no gainers, guys, today. So today's just a rough day. One thing I want to point out, though, is that the Bitcoin dominance is up 53.6%. Now, zooming out over just the year, you'll see that with the exception of a few peaks right here around 57 and 54, and 55, for the most part, guys, we're pretty much sitting at all-time high Bitcoin dominance. So this is telling me that people are definitely losing a little bit of faith in the altcoins right now. The altcoins are getting hit a lot harder than Bitcoin, so people are moving their money into Bitcoin and obviously also into Tether, clearly, as a safe haven. Now, having a look at the charts, we were just talking about this yesterday. This line was very, very critical. We had tested it about 11 times, and we finally broke through. I feel like we knew this was coming. It was just a matter of when. So now we are currently sitting around 3,416. As you can see, we're struggling right here. We had massive insurgence of volume and it has pulled back. So zooming out a little bit, having a look, what is the next potential support? Well, the last time we came down here, we touched that $3,120-$130 mark, and that's pretty much where we bounced back. So the question is, are we trying to form some kind of gigantic double bottom? Are we going to touch again? Are we going to go lower? That's the question on everybody's mind, but the farther we move away from these other key resistant points, the more difficult it's going to be to, obviously break out to the upside. Now, I actually have a poll right now. I was curious, what do you guys think? This is over on Twitter. It's the Crypto Zombie. If you guys haven't checked it out yet, I said the total crypto market has lost another $6 billion overnight. Which level do you think Bitcoin will see first? 3,900 or 2,900? And so far, out of 249 votes, it seems that the majority of you think we are going to go much lower before we go higher. Some of the responses, it's sad to see, even though we are super bullish long-term, it sucks that we are so bearish short-term. This is one big-ass grizzly bear, not a lovely polar bear we are enduring right now. That's right, it comes down, great, I get to buy more. There you go, that's one way to look at it. If it goes up, great, my bags gain. And Juicy Vegan Dwarf says, I don't think this is even a negative sentiment. It's just the more of us are hopeful that we get the opportunity to buy Bitcoin under $2,900. I agree. Actually, there's a lot of people recently that have entered the space. I know this because I'm getting comments about people telling me like, hey, I just bought my first Bitcoin like a week ago. So it could be that these new people in the space are actually just hoping for a cheaper Bitcoin because they just got in, right? So definitely let me know what you guys think about that. I'm going to give these all likes because you guys rock. Now, moving on, what are some people saying in the space? Because you guys know, I'm not an expert, right? So let's see what these other guys are saying. Well, with this strong move that has recently happened, analysts have begun to reassess market conditions. One Texan trader who goes by the name of Magic Poop Cannon recently noted that investors should start paying close attention to the markets. You can see right here, he says if Bitcoin falls about 5% lower to around 3,300, it will be testing the ever important weekly 200 moving average, which a lot of people are talking about. And this has been the consistent support for Bitcoin for quite some time now. And what forced the last bear market to bottom? If we close below that, things are going to get nasty. In fact, in response to the tweet, you had Vinny Lingham, the CEO of Civic, sticking with the nasty line and saying that if we go under $3,000, which is regarded as a level of utmost importance, the current crypto winter will become a crypto nuclear winter. So although there's a chance that Bitcoin could hold above 3,300 for an extended period of time, some are a little bit more skeptical. In a recent post off the chain Morgan's Creek, Anthony Pompliano, known for touting anti-bank pro-Bitcoin rhetoric, noted that he expects for lower lows in the coming months, along with a bear market that could persist until Q3 and potentially Q4 of this year. Are you guys ready for the journey? Will you actually stick this one out? That is the question. You also have Clem Chambers, the founder of ADVFN, recently explained that Bitcoin could find a bottom at 2,500. That's my personal number. I've been sticking to 2,500 now for I think over a month now. So he says that that's the possibility. So that's pretty much what these guys are saying. But another thing to note is, accounting for the lack of price action and volatility, you also have crypto analyst Alex Kruger. He identified some actual factors that have put a damper on the markets. Now, these are real factors. These are things that are actually happening, okay? So for one thing, you have all these different delays and disappointments that have hit the industry over the past weeks. The institutional Bitcoin future product backed is pretty much delayed indefinitely. Not saying that, they're not going forward. We just saw them trying to hire people. But as of right now, there is no date. So they are technically delayed indefinitely, until we see what's happening. Now, obviously, we had some good news about the government, shutdown turning around. So maybe that'll speed things up a bit. We'll see. But, you also have these other things as well. We had VanEck, SolidX, Bitcoin ETF getting pulled. And then he's telling everybody to go buy gold. So these are all situations that we're having. On top of that, we had Ethereum's Constantinople upgrade fork had a critical vulnerability. So that got delayed as well. Also, the increasing closure of North American BitMEX accounts could also be negative. They're just shutting it down for Canadians, shutting it down for USA. He also points to the abysmally low interest in cryptos, referring to Google Trends, which it literally look like the chart. I mean, it's almost exactly like the chart, which is crazy. And he also pointed to the indications that the crypto asset market has gone into an accumulation phase as wallet activity is decreasing. Delphi Digital has conducted UTXO analysis in the recent months to arrive to pretty much the same conclusion, which while potentially is a good sign for the market's overall health, it also suggests that the markets will be less exciting. Finally, he says, for someone to accumulate, someone else has to distribute. It is a zero-sum game. Accumulation per se is neither bullish nor bearish. With the current trading volumes, I'd bet on exchanges and miners currently accumulating. Eventually, they will likely start dumping again. So this is something that we have to keep in mind. And hey, you know who else had something to say, to chime in on this as well? Our good old buddies over at JP Morgan. That's right. So outside of the letter that they gave out the other day saying that Bitcoin's going down to $1,260, I think it was, now it says, is there any sense to enter the sphere for Bitcoin mining, as Kruger was just speaking about? So according to analysts of JP Morgan Chase and Company, the American multinational investment bank and financial services company says that no, mining is not feasible at all. That's what they're saying. Let's dive into this a little bit more. After having conducted a thorough research, the experts found that the production weighted cost to create one Bitcoin in the fourth quarter was approximately $4,060 worldwide. Now, you can't say that's what it is worldwide because the price is different all over the place. In fact, if we come over here to Market Watch, now, granted, this is a little old now because we've had differences in hash, differences in difficulty adjustment. We've seen miners closing down. But this chart roughly shows where we stand. And you can see right here, with the current price of Bitcoin, being as low as it is, a lot of these countries can't afford to produce Bitcoins for a profit. Look down here. Australia, that's a no. Belgium, that's a no. Brazil, that's a no. Cambodia, nope. And you're seeing more of these. Now, China it says 3,172. So they actually do speak about that. They say there is a clear group of miners who still have a chance to win the situation. In China, to generate one Bitcoin, they're saying it's roughly estimated now around 2,400 bucks, which means it has dropped since that chart I just showed you. The drop in Bitcoin prices from around 6,500 throughout much of October to below 4,000 has now increasingly pushed margins further and further negative for about every region except low-cost Chinese miners. But if the number of miners decreases, the production costs will fall. For example, if only Chinese miners remain, it will cost less than $12.60 to make a Bitcoin, right? And obviously we know the difficulty adjusts. So that's the beauty of Bitcoin. You know, it never really ends if everybody just turns off their, their mining, their ant miners or whatever. Then it just makes it that much easier for the next person to mine, okay? But the one thing that I do want to point out is, although these statements are not entirely inaccurate, they're true. At the same time, I just want to point out that JP Morgan has been absolutely known to FUD the market while in the background accumulate Bitcoins on the low. So I really don't trust much of anything that comes out from guys like this that talk about that. In fact, I don't know if you guys have seen this video. You may have seen this video. If you have, you're welcome to skip forward, but there might be some new people in the space. And I want to point out something that happened back when Jamie Dimon was busy calling Bitcoin a fraud and Bitcoin a scam, and yet they were busy in the background accumulating. So if you guys haven't seen this, just check this clip out really quick.
This has really been extremely egregious. So on September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. People listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says you fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
Right.
So moving on, you can see exactly what I'm talking about when it comes to these guys blatantly manipulating the markets. And crazy enough, it's not actually illegal to FUD something and then buy it. Crazy, right? So moving on, let's talk about some more damages that are happening in the bear market. We have the most recent exchange, Liqui, shutting down. They sent out this announcement that said, we're happy to announce the changes in our policies. We gave you the rights to decide whether you want to be with us in the crypto journey, etc. And then they said, much to our regret, after this step, Liqui is no longer able to provide liquidity. The irony, Liqui can't provide liquidity, but hey, they said that there's nothing we can do. We also don't see any economic point in providing you with our services. However, we do not want to return to where we were a month ago. Hence, we decided to close all accounts and stop providing our services. It broke our hearts to do that. So anyone that has your money on Liqui, it's not like they're exit scamming, okay? They're saying you have 30 days from this message to withdraw everything. And then after those 30 days, they're not guaranteeing anything because they don't even know if they're going to be maintaining the site anymore. They say they might be back, but it just depends on the market, which has clearly significantly changed since 2017. So yeah, there you guys go. Then they end on a quote that says, we want to finish this message by the phrase of Marianne Williamson. Every ending is a new beginning. Through the grace of God, we can always start again. So there you guys go. We have yet another exchange that is shutting down, okay? Now, I want to talk about, not just these exchanges, but also there's so much talk about regulation, so much talk about what the SEC is doing. Some people think the fact that the SEC got involved so heavy last year and the beginning of this year could potentially have something to do with that negative connotation of the space as well. So you have Monero core developer Ricardo Fluffy Pony Spagni, you might know him. He said he expects regulatory arbitrage to become an increasingly prevalent and impactful phenomenon in the crypto space in the coming years. So he began by dismissing the notion that the very existence of crypto is going to cause governments to topple, okay? Obviously, ludicrous pipe dream, okay? We've gone over this. Yes, there's the Bitcoin, libertarian maximalists that, really believe in this like crazy decentralized future. We know that in reality, the future is probably going to be a little more hybrid. Okay, there's going to be centralization with decentralization. And what he proposed instead was a more subtle shift in geographic distribution of talent and innovation that will be sparked by uneven global crypto regulatory landscape. He suggested that crypto companies will increasingly turn to regulatory arbitrage to adopt jurisdictions that have made themselves open to decentralized projects through regulation and tax breaks. This won't necessarily lead to governments being toppled, but it's going to lead to an interesting brain drain. Some of the smartest people on the planet are working in crypto, and when they start clustering in places that are more friendly from a regulatory perspective, that's going to create something very interesting. He pointed out to Malta, for example, known as the blockchain, island, right? So, his prediction recalls tech investor Tim Draper's response to harsh anti-crypto agenda pursued by India's central bank, right? So last April, in the wake of the Reserve Bank of India's prohibition on domestic banks dealing with crypto-related businesses, Draper warned of potential brain drain, characterizing the move as a huge mistake for the country. Facts on the ground so far have suggested that arbitrage is indeed underway globally. In fact, we've seen several crypto industry leaders relocate their operations to Malta, and this includes Binance, OKX, and BitBay, just to name a few guys. So I like it that these guys are fighting back. I mean, for example, you have startup Kick has actually warned the US regulators that they are going to fight back against a proposed enforcement action. So Canada-based Kick is facing a prospective enforcement action over an alleged securities infringement after the US SEC judged it in 2017 that its ICO had involved the sale of unregistered securities. Not the first time we've seen them, pointing fingers at people. Obviously, we had AirFox and Paragon. Okay, so in a blog post that was published yesterday, the Kick CEO and founder Ted Livingston stated that the startup was poised to fight against the action, arguing that the crypto space as a whole must challenge the application of security laws to emerging assets such as decentralized platform tokens, right? So Kick's letter submitted to the agency on the 7th argues that the SEC's regulation by enforcement approach to date has had a dramatic and negative impact on the development of blockchain and cryptocurrency technologies in the United States. Getting back to what Fluffy Pony was saying about all these guys saying, screw this, we're just going to go somewhere where they're actually going to let us do what we're trying to do, right? So the letter notes that the U.S. regulators would be doubling down on a deeply flawed regulatory and enforcement approach if the recommended enforcement action was authorized. The startup says that it's not asking the SEC to change the law to accommodate disruptive technologies. On the contrary, it argues that the SEC erred in stretching the definition of an investment contract under security laws beyond its original meaning and intent. So this implies that if the SEC indeed pursues its enforcement action against Kick, the case is likely going to culminate with a judge in a civil court case being called upon to rule on and potentially set an important precedent for the question of whether ICO sales are to be regulated as security offerings in the country. So if these guys continue to fight moving forward and they take this thing to the next level, this could potentially be that one case, that one case that they always put in the history books that really will help us to understand truly what the heck is going on in this space. So I'm interested in seeing what's going on. And I also think it's cool that these guys are standing up for themselves, being like, no, this is a utility and we're going to fight it. So I think that's pretty awesome. Also, speaking about the fact that you're seeing guys like the SEC really complicating things, you're seeing so much taken into the hands of just the local law in general, right? How many states have been coming out with different bills? You have the Washington State Senate introduced a bill that would, through amending existing legislation, encourage the development of distributed ledger and blockchain technology. So the bill appears to codify blockchain-enabled digital signatures and licenses and provide the legal recognition necessary to enforce these standards. So on January 25th, the Washington State Senate introduced SB 5638, an act relating to the recognizing the validity of distributed ledger technology. So essentially, the bill would amend and add to an act already in state law, the Washington Electronic Authentication Act, revising the purpose and construction and definition sections of that act. So you are just seeing these guys taking the situation into their own hands, and this is what's happening. Blockchain companies are moving. Local, states are starting to come up with their own ideas about how they feel and their own laws about if you can be taxed and how to pay using crypto, etc. So it's going to happen. It's, innovation is not going to stop. And if you guys are trying to bring it down locally, then we're going to move. Okay. And as far as these guys fudding the price, getting back to the whole JP Morgan and all that stuff, it might work a little longer, but you're seeing less and less and less and less people selling. It's just, you know what I'm saying? So eventually you're going to reach a point where, you're just going to look at the price and the last guy's going to go, I'm not selling. That's too cheap. I'm not selling. And once we've reached that point, well, you guys know what happens. So moving on to some coin news of the day, we have a little bit of a conspiracy kind of building. Now, I did see this, it wasn't an article at the time. At the time, people were just pointing to different Ethereum transactions on the blockchain. I remember seeing this, but I didn't cover it because I wasn't really sure if it was just kind of over speculation, right? Well, these guys are now bringing it to the spotlight, and I want to share with you what happened. So something fishy took place on December 1st. So new analysis from AI-powered blockchain investigator ORS CryptoHound has uncovered some unusual activity on the Ethereum blockchain, which took place last month. So ORS CryptoHound took a look at the 100 largest Ethereum transactions for the last quarter of last year, and in doing so, found a strange pattern in the blockchain's wealthy elite. So the 6 wealthiest wallets all transferred a sizable sum of Ether coins on that date in question, totaling almost $500 million at the time of the transactions. Each of the wallets in question contained a 92 to 98% share of OmiseGo, which is interesting. So now some people are thinking, could this be OmiseGo advisors or something like that, right? Not saying it's, Vitalik or anything, even though he was advising, but talking about this, the wallets were all seemingly created on the same day as well. So this kind of says that this was almost being planned. This was a strategic thing, right? And then the wallets all cycled through their holdings via multiple transactions in a notably similar manner until all of the initial tokens being tracked were divided equally among 39 new wallets containing exactly 150,000 ETH. So this could be nothing, or it could be an attempt to almost make Ethereum look more decentralized than it really is, potentially. So they say clearly the transactions from the 6 wealthiest wallets in question were all coordinated, but the question is, why? I think I just answered it, but let's see what they said. Though the team behind the investigation did not directly point fingers, it suggests that one or more Ethereum whales or prominent stakeholders attempted to make the project appear more decentralized than it really is by separating the coins and the OMG. So there you guys go. Let me know what you think. Coincidence? Are we paying too much attention? I mean, it's really weird how I don't have it pulled up right now. You guys can go on Etherscan and verify this, but I mean, it's literally like the exact same amounts getting moved. All the wallets created on at the same day. Then all of the funds moved later on at another day that was exactly the same. So a lot of people are wondering what the heck is going on with Ethereum? What is going on with these whale wallets? So I just wanted to bring that to you guys. Also, we have more accusations. It's kind of one of those days, guys, right? So we got Dash Merchant Venezuela is getting severe punches from the global Dash community for supplying deceptive documentation about salary remuneration. So let's have a look and see what this is all about. So Dash Watch has published its financial report regarding October to December of last year, saying that DMV, Dash Merchant Venezuela, the team working on adoption of Dash among the merchants in the country, had supplied false data regarding the payouts of salaries to its employees. Further on, details were reported that the fake data had been sent in, they were worried regarding the team's concerns about the possible disclosure of the data in Venezuela, taking into account the current unstable political situation there. So the reports of embezzlement or even a shadow of such suspicions could turn the coin's recent progress into a deep fall, especially taking into account the long dominance of sellers in the market. Now, Dash Watch has assured the community that from now on, DMV will be providing only accurate data and has already supplied the necessary documents, which earlier had been falsified purely out of security measures. So that's what they're saying. Despite the negative media reports about the incident with DMV, Dash adoption in Venezuela seems to be going quite excellent. So that is good news as well. In fact, just let's talk about some positive news. Let's not just like kick the coin when it's already down. They finally released their newest upgrade, 0.13. So with Dash Evolution 0.13, automatic InstaSend features are available, which means you will be able to send simple transactions with no cost instead of waiting for transaction confirmations. They'll instantly be confirmed by fewer nodes while removing the additional fee for InstaSend. This moves Dash closer to getting its goal of being a true digital cash. So there you go. Now let's also talk about another coin. We have Ripple that has been quietly working away with a focus on expanding its networks of partners and increasing the usage of adoption of its native token XRP. So the latest initiative is a RippleNet Accelerator program that offers financial incentives to institutions that help promote the Ripple payment system. So the volume rebate, which is the first one, is an incentive that offers XRP rebates to RippleNet members which have reached certain milestones in terms of processed transaction volume. The announcement goes on to add that the reimbursements can cover anywhere between 50 to 300% of the integration fees and first-year licensing fees. It can be taken in XRP or USD, but resale of tokens will be restricted to support healthy XRP markets. The second part of the initiative is an adoption market incentive, which rewards members that promote Ripple's services to other companies. RippleNet members will be given marketing tools and materials to help expand the ecosystem. Vice President of Marketing at Ripple, Monica Long, likened the initiative to the early days of PayPal. So there you go. That is the news from Ripple and XRP. Now, here is another theory that's been circulating around, okay? So this guy right here, this is the ex-Starbucks CEO, Howard Schultz, and he is saying that he is considering running for president of the United States. So some people are saying, well, with Starbucks and Bakkt being in cahoots, are they going to, he's the ex, keep in mind, but, is this guy going to help us out? Is he going to promote Bitcoin? Well, unfortunately, probably not, because he's previously slammed Bitcoin, saying that it's not legitimate. He said, I don't believe that Bitcoin is going to be a currency today or in the future. And this was in January of 2018. He also said that another more trusted crypto other than Bitcoin could become currency in the future. However, it must be tethered to a legitimate brick and mortar establishment where the customer has trust and confidence in the company that is providing the transaction. So here's the thing. He doesn't oppose crypto. He just has a problem with, Bitcoin. He's a fan of blockchain tech, and we see this among a lot of these guys. He even hinted that Starbucks, which has more than 28,000 locations worldwide, is considering integrating blockchain into its mobile app. He said, I think blockchain technology is probably the rails in which an integrated app at Starbucks will be sitting on top of. Now, keep in mind, Howard Schultz, whose net worth is $3.3 billion. He was the CEO of Starbucks from 1986 to 2000, and then again from 2008 to 2017. He now joins a growing list of liberal candidates who have publicly announced their candidacy. So, yeah, we'll see, guys. We'll see. I mean, I don't think that this is going to do anything for crypto or Bitcoin personally, but some people were speculating, so I figured I would just talk about it. But hey, let's end on some good news before we go, guys. So Germany's largest online food delivery platform has swelled to over 13,000 restaurants and accepts Bitcoin for payment. The Berlin-based, I don't know how to say this, Lieferando, I guess, operates across the country to deliver all types of culinary dream dishes from fancy to fast food. So online customers can pay with Bitcoin, credit cards, SoFort, or PayPal. When paying with Bitcoin, the company says it does not charge any fees, while it costs an additional 6% to pay with PayPal or credit cards. So they also just announced the winner of the Best Restaurant Award out of 1,231 restaurants. It's a pizza joint. Are you guys not surprised? I'm a New Yorker, so we got our thing with pizza over here. Lieferando is owned by Takeaway.com, who started accepting Bitcoin in 2017, and the company says that the payment option has actually been very well received by its customers. Not to mention that they also power Bitcoin payments for deliveries in Netherlands, Austria, and Poland. So if that's not enough good news, guys, I just want to end on this note. This was an interview with Patrick Byrne, CEO of Overstock, talking about Bitcoin in the Bit Cryptic podcast, and I just want to end on this little note, and then we'll get on for the end of the day. So let me play the clip.
In that space, let's say we get to a world where everybody has digital money on their phones. You have digital dollars, digital wherever, rupees, if you're in India, on your phone. Then when you want to go send them to other people, the rails can be crypto, the rails can be blockchain. Those kinds of systems are emerging in several countries. We're talking to several countries, frankly, and across, we've seen some announcements about Africa. You're going to see this stuff popping up, I think, this year. Some of these technologies actually rolling out this year. And what will happen is crypto and Bitcoin or Florin coin or Raven coin will be the backbone of a bunch of that. And then eventually people will start asking, why do we have to have all this junk on top of it? Why do we have all these banking systems and things called dollars or euros or whatever on top of it? We actually can just use the rails. And eventually this stuff will kind of wither away. You know how Marx always said the state will just wither away? I think as blockchain gets more infiltrated, the other stuff is just going to wither away.
So on that note, guys, I want to leave you with that. I think that was good for today's video. I really appreciate everybody stopping by. You guys are awesome. Seriously, I know it's a rough day today. Let's go back real quick, see how we're doing. Oh my goodness, guys, we are still falling. Wow. All right, well, you know, welcome to the ride, guys. This is crypto. You know, I'm still calling 2,500. But, you know, I'm not saying I hope we go that low. I mean, it'd be nice to not. But at the same time, I have prepared myself for this, and I hope you have as well. Also, one thing before we go, I just want to say that you don't have to buy every day, okay? This is a big mistake that some people make. They think every time it falls, you have to dollar cost average. Now, dollar cost average is great if it's money that you don't mind. You know, if it's like 10%, you don't need it. Sure, who cares? Price goes down, price goes up, right? But if it's something that is maybe worrisome, or don't put your don't put your rent money into Bitcoin, right? So that being said, please be safe out there, guys. Please be smart. We are in a bear market. There is a clear downtrend, guys. So I just want you to just be safe. And yeah, it's not going to be this way forever, but currently, what are you going to do? This is what we're at. So looking forward to the years to come, guys. I'm really excited that you guys are on this channel. I really appreciate it. Please, as you guys know, Liqui's closing down. There's all these different situations. You may see some more exit scams in the future. So just be careful with any of these projects, because a lot of them are going to be very desperate right now. And, you know, when you are pushed into desperate situations, well, you make desperate calls, and sometimes these people don't necessarily do the right thing. So that being said, guys, I do, as you guys know, always suggest to keep your hardware or to keep your crypto on a hardware wallet, guys. Be safe out there. As you guys know, I do have links below for the Ledger Nano S and Ledger Nano X. Does help the channel out, doesn't cost you anything extra. But that being said, guys, I do appreciate you stopping by the channel. It's Monday, back on the grind. You rule. Seriously, everyone that's been liking, subscribing, and commenting, you guys are the reason that I do this every single day. And yeah, that's all I got for you today, guys. It's Monday. Let's do it. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto and peace out.